Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Another week, and we have yet again seen more highly anticipated money making opportunities. That is of course one of the most lucrative trends of the current financial climate that we find ourselves in right now. In today's highly macro driven markets, they're fueling one of the greatest wealth transfers we have ever seen, presenting savvy traders with a series of exciting back-to-back money-making opportunities. There's no denying that 2023, that is certainly shaping up to be an incredibly lucrative year for traders, bringing with it a series of highly lucrative market-moving themes, from the re-accelerating inflation to monetary policy crisis to escalating global banking crisis, which is rapidly becoming known as Financial Crisis 2.0. And just in case that wasn't exciting enough, traders, they're now on the cusp of being gifted even more lucrative money-making opportunities with a looming global credit crunch, which may ultimately lead to the most hotly anticipated event of all, which is the Fed policy pivot. Exactly 1 year ago, the Federal Reserve, they embarked on their most aggressive interest rate hiking campaign since the 1980s. The goal was to arrest a stubborn inflation wave that central bank officials spent the better part of a year dismissing as transitory. After 2 weeks of banking turmoil, which began in the US, that has rapidly spread across the global banking system, and the Federal Reserve, once again, they hiked its benchmark interest rate for the 9th time last Wednesday. The Federal Reserve, they have now jacked up interest rates at the fastest pace in history, from virtually zero to a current range of 4.75% to 5%. That's the highest rate since 2007. Put another way, that's a whopping total of 475 basis points of hikes since March of 2022. The Fed, they also signaled that it might be nearing the end of its rate hike cycle, because a decline in bank lending could also help the central bank unintentionally achieve its overarching goal of slowing the economy and taming inflation. At the press conference following the rate decision, Fed Chair Jerome Powell said the banking industry stress could trigger a global credit crunch, with significant implications resulting in stricter lending, making it extremely hard for individuals and businesses to qualify for loans, mortgages, and credit. Jerome Powell concluded by saying tighter lending conditions will have the same slowing effect on inflation that rate hikes can have also. Historically, the Federal Reserve, they have never been right on monetary policy and have a proven track record of setting the economy up for an even bigger crisis ahead. And that's exactly what we're seeing right now. The collapse of several prominent banks in recent weeks, from Silicon Valley Bank to Signature Bank, as well as the implosion of Credit Suisse and panic around Deutsche Bank being the next major bank on the verge of failure, that has traders convinced this could be just the tip of the iceberg. Mounting evidence now shows the global crisis was fueled as a direct consequence of soaring interest rates and liquidity risks, but the crisis is now about to get even bigger as it rapidly morphs into a global credit crisis. The threat of a credit crunch ripping through the global financial system, that has overtaken inflation this month as one of the hottest and most important macro trading opportunities of this year, if not the decade. Banks, they currently hold over 80% of all commercial real estate loans worldwide, which presents the same systematic risk to the economy as seen during the 2008 global financial crisis. The next few months, that will be critical, with 270 billion in commercial mortgage-backed securities set to expire, and that number is only going to get bigger, with a total of $2.2 trillion in commercial mortgage-backed securities due to expire over the next few years. Last week, Blackstone, they rattled the markets when it defaulted on hundreds of millions in commercial mortgage-backed securities. Within days, the defaults, they started coming fast and furious, with other big-name lenders in commercial real estate, including Brookfield and Columbia Property Trust, also defaulting in billions of dollars worth of commercial mortgage-backed securities. Could this be the start of the domino effect? Some depositors, they're not waiting around to find out. Last Friday, customers withdrew a total of $42 billion from their accounts. That's $4.2 billion an hour, or more than $1 million per second for 10 hours straight. On the flip side, the precious metals markets, they recorded a net inflow totaling $5.9 billion. That's the second largest inflow in safe haven metals ever recorded in a single week. As a result, there's nothing historical you can point to for what is going on in the markets today. The current macroeconomic backdrop that is fueling one of the greatest wealth transfers of our lifetime, presenting savvy traders with incredible back-to-back opportunities to generate huge profits fast. In fact, this month we've seen a number of commodities they've notched up spectacular double-digit gains in a single week, sometimes in a single day, not once but on multiple occasions. Take the last week, for example, we saw a huge explosive move across the precious metals, with silver prices surging to fresh multi-month highs, racking up impressive double-digit gains in a matter of days. Meanwhile, gold has been on an unstoppable run, tallying up its fourth consecutive week of gains on Friday to post its best weekly performance in 3 years, with prices rallying above $2,000 per ounce on 3 separate occasions in a matter of days, notching up impressive gains of over 10% since the collapse of Silicon Valley Bank earlier this month. Interestingly, that's the exact level gold prices were trading at 3 years ago, back in March of 2020, just before prices blasted through all-time record highs. Since the first quarter of 2022, gold prices they've gone parabolic, rallying almost $400 an ounce from their November lows of $1,600. The bullish momentum also spilled into gold, priced in other currencies such as the British pounds, euros and Australian dollars, sending prices skyrocketing to all-time record highs. And this could just be the beginning. It's often said that history doesn't repeat, but it rhymes. Right now we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there that completely missed out on 2 of the previous greatest wealth transfers in history, including the global financial crisis in 2008 and more recently the pandemic in 2020. The ones that saw the opportunity and knew how to capitalize, they accumulated life-changing wealth. According to the World Wealth Report, 6.2 million ordinary people became millionaires for the first time during the 2020 pandemic, which is more than any other time in history. I'm sure all of us know a friend, a colleague, or even a family member who made an absolute fortune. But history is about to be rewritten. Once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of our lifetimes. The explosive cocktail of events that is currently unfolding, that now presents the 3rd greatest wealth transfer of our lifetime. You don't want to be the person who knew about this, had the chance to capitalize on one of the greatest wealth transfers ever, and missed out again. According to Bloomberg, 1 in 2 people, they have now turned to trading to protect their hard-earned money from reckless central bankers and to capitalize on the high return opportunities on offer in the new economic climate that we find ourselves in right now. More millionaires and billionaires they'll be made this time round than ever before. The only question will be, will you be one of them? Definitely don't underestimate what you can achieve in the next 1 month, 3 months, 6 months, and even 12 months from now. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures, and we're only in March. If you want to supercharge your trading results and make 2023 your best year yet, then go to jointhegoldandsilverclub.com now to learn how Mentorship program can help take your trading to the next level. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at the moment. Now, this may come as a surprise, but we're in fact looking at gold to tank as we go into next week, and I'm expecting crude oil prices to accelerate higher over the next week here, and I'll tell you exactly why. So with commercial positioning right now with crude oil, they're actually at the highest level that we've seen in over a decade, whereas hedge funds and money managers, they've been positioned on the wrong side. They've essentially been panic selling out of their long positions over the last week. Many have been liquidated, and what did we see? A 700-point breakout to the upside. This time last week, we talked you through great buy opportunities on crude oil, back down towards $65 per barrel. We took the opportunity to build into multiple positions on crude oil over the last week. We had a breakout of over 700 points from lows to high. In fact, on the FOMC statement on Wednesday, we took the opportunity on the breakout that we got to the upside, 3-day impulse move to bank over 900 points over a couple of trades. So of course, every 1 lot contract you'll be trading, that's $9,000 of profit. every 10 lot contract you'll be trading, that's $90,000 of profit. Now, moving over to gold, it's no surprise here that hedge funds and money managers, they've come really late to the party here. So after we've already seen over a $200 move to the upside here. So we've seen 2,000 point move, taking the price all the way up to $2,000 per ounce. It's only now in the last week the hedge funds and money managers have FOMO'd in right as the price is broken out to $2,000 per ounce. So what do we have here? We've got 1, 2, 3 taps into liquidity. We're already seeing some pressure here on the Sunday open through to Monday for gold. So basically all of the traders who've gone and FOMO'd in around these levels at $2,000 per ounce or just below that, the 1990s, 1980s, expecting the price to break all the way out to 2,060 or 2,174, they're going to provide potentially a lot of liquidity for all the sellers here in the market. Commercial positioning has come out in a big way. They've reduced their net longs. They've taken the opportunity to dump on retail here. So what does that mean? It means the producers here, they're selling. They're taking the opportunity of what they produce to sell it at a higher price, around $2,000 per ounce. They're dumping hard into the market, and retail are FOMOing in hard because so far over the last 2 to 3 weeks, gold has been outperforming every other market. But it's too late, in my opinion, to be buying at these much higher prices right now. You really want to be buying here when we were building into multiple positions on commodities. We caught the exact day of the reversal on silver here. That's broken out over 15% now, over a 300-point breakout in our favor. We've continued to scale out of more profits in the last week here with silver. So my suggestion is that as we go into next week, you may in fact start to see, because it's the end of the quarter as well and the end of the month, you might start to see the dollar pick up some additional momentum. A lot of traders will be wrong-sided by this. They'll FOMO into gold at the wrong prices, right at the swing highs here when it's already broken out to the upside here. Over this month so far, a 10% move for gold. So you're going to get a lot of traders, they're just buying it too late. They've got too much FOMO, which is the fear of missing out, and they're going to potentially just get liquidated if we start seeing the price pull back further. Now, the caveat to that would be if we are going to see more banking failures, yes, I would agree. That's where you could very quickly see gold get a bid and break back out towards $2,000 per ounce. However, each time we're seeing that, we're then seeing another central bank coming in to intervene, or you're going to have one of the Fed officials giving further support to the market, whether that's Janet Yellen or Jerome Powell, or you're going to see speeches from the Fed which are going to come in and support the market. This is typically meaning gold is really struggling to break at the moment above $2,000 per ounce. It doesn't mean it won't do it as we progress into the next quarter, but just right now, bear in mind this is the last week of the quarter, the last week of the month. So what are you going to do if you're a portfolio manager and you're up about 10% on gold? You're going to book your profits. It's the end of the quarter. You're going to take some profit off the table. If you're going to start booking some profits on gold here, when would be a good time to do that? It's going to be at the end of the quarter to book the profits for your performance here, especially if gold has gone up 10% over the last month here. So again, I would look at gold and silver as well to potentially see profit taking. And I do note right now, commercial positioning is the strongest it has been in over a decade on crude oil on the long side, whereas we've seen hedge funds and money managers, they've started to build into their shorts at the wrong time, as we've already seen prices break back down towards $65 per barrel. I'm sure you've seen it out there. Multiple analysts out there expecting the price to crater down to 60 or 55 or $50 per barrel. What happened last week? We already got back above $70 per barrel. The price action only stayed really a couple of days around the 64, 65 level. It was nothing more than a massive buy opportunity, as we identified with you last week. You've already got oil right now trading just below $70 per barrel, and potentially if we start building further momentum here, as commercial positioning is suggesting at the moment, all of these traders who've started to flip into net sell short, they're going to start getting squeezed. And you've also seen many hedge funds and money managers panic sell at the lows anyway, so they're not going to be able to capitalize on a move higher here. And you could see a very quick breakout here on energies, in my opinion, as you move into the next quarter. So really the playbook here, we've continued to bank profits on silver. We caught the exact reversal on this move here, so we've banked into strength certainly over the last week. Silver's actually performed better than gold. It's up 11% so far for the month. My expectation is that gold, a lot of traders are going to FOMO in at the wrong price here. We've already seen that from analysis out there. We've seen multiple institutions as well come out with ultra bullish forecast at the very top of the move here. So again, this is going to lure the retail market to FOMO in, to buy in. We've already seen hedge funds and money managers, they're buying at the top of the move, and the risk reward profile is really not attractive to be buying at these levels right now. That's not to say it can't go higher if we were to see another bank failure, but in absence of that, you could definitely start to see end of quarter profit taking accelerate, the dollar start to pick up a bit of momentum here, and it would naturally make sense at this point in the cycle for energies to pick up momentum and gold to start pulling pulling back. So we hope that gives you some further assistance. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, and not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There is a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that just do not work in these markets. If you want to get yourself out of the bottom 99%, and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, then the odds are already massively stacked up against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive, research-driven approach that is not taught to retail traders and is only reserved for professional traders in banks and hedge funds with access to powerful game-changing insights, including where the banks and hedge funds are buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, the weekly, the monthly, quarterly, real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. We are in one of the greatest eras of wealth creation the world has seen. And if you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.